All right, hey guys, BC in DC here with the second installment of a 3-part series. I called it 3 Steps to Heaven. It's basically these 3 things. We've already got the first video done: draw supply-demand zones, identify trend. If you haven't watched that video yet, go back and watch that one first. It'll make more sense if you watch these in order. The one we're doing now, add fibs and identify potential support resistance and reversal zones. This kind of thing is very simple and effective, and it works well in combination with whatever other methods you're using. This is going to increase your consistency dramatically for entries and exits. In fact, there are some guys trading only this, no technicals, no moving averages. You could almost trade pure price action. I like to combine it. Anyway, so part 1 video, this is a result of that. These are the supply-demand zones. This is us indicating we are in an uptrend at the moment. So we want to now add fibs and identify potential support resistance and reversal zones. All right, so first thing we need to do is set up our fib tool. In crude oil, the big numbers are 618 and 886. Crude oil routinely likes to retrace to the extreme, either 100% or up to 88.6%, or at least 61.8% of a move. And just to show you what I'm talking about, in case you don't know, I'm going to just go through here. This is a 4-hour chart of crude oil, and I'm going to show you how frequently crude oil likes to retrace between the 618 and the 886. And as we drill down, we're going to start this on the larger time frame, but we're going to eventually drill down and look at the areas that are more actionable. So in this case, I've already got a tool that's set for 618 to 886, and it's got a little background highlight on there just so you can clearly see that zone. So you can see crude oil came down, then it bounced all the way up almost to the 886. It came right into this zone, didn't it? Now you can see this bounce, this low held, so this bounce came up almost 100%. It retraced almost 100% of that move, and then it crapped out, and it came all the way down to this level, and then it bounced. So let's measure this bounce. Now all I'm doing right now, right here, is taking a look at the character of crude oil, and when it bounces and retraces, what does it typically do? What zones does crude oil typically like to retrace to? And you can see here that it has once again bounced up in between the 618 and the 886 on this bounce. And that's twice I'm showing you that. This time it came up almost 100%. So let's measure this one from here to here. And you'll notice that I'm measuring these levels that are highlighted with the circle, 69.28, because those are the lows and the highs of this trend. So this retrace right here came up to the 886. Can you see that? I know it's noisy in here, but the point is, just to illustrate, when crude oil retraces, it's very often coming between the 618 and 886. In this case, it came right up to the 886. Now, the power of these fibs is accentuated by the supply-demand zones. So, for example, this not only did it come up to the 886, but it also struck a supply-demand zone and the 886. That 886 is right in the supply-demand zone. So it's good to know that. I mean, look at all of the scalping potential, price going up and down within these zones and within these fib levels. So all we're trying to do at the moment, I'm just trying to illustrate this so you can see for yourself how price behaves in crude oil. Now, over here, this is the 100 fib, right? This is the top of this supply-demand zone. So we don't have to measure this high because we know it almost struck the 100 fib. So it exceeded the 886. I didn't even put a fib over here, but you can tell, look, if this is 100%, this is 100%. We retraced almost the whole thing. Almost the whole thing. And it came to our supply-demand zone. So I'm not going to put a fib on there because you can just see, common sense, it retraced almost 100% of the entire move down was retraced. But then look what it did. It gave up. How much do you think that is? Think that's 618? I don't know. Let's find out. So I'm going to grab this swing low, which is 61.71. I'm going to put it on this swing high, which is 79.29. Drag that over so we can see exactly where it hit. And basically, look at this. It's right in between the 618 and the 886. And it's right on our supply-demand zone. So if you were shorting this, which we were, I was shorting this in chunks, and it worked out beautifully. This was a very successful wave down in terms of scalping and trading. Then it totally reversed. And you can see where did this retrace to? This level right here is almost 100%. So it doesn't take a genius to realize that obviously it retraced almost 100%. But let's just put the fib on it just for sake of exercise. So that level there is 71.41. You have to pardon my kids; they're awake now, running around. 74. So let's just move this all the way over. So you can see here, it actually poked above the 886, but it didn't make a new high. Oil loves the extreme. So it's coming back up, retraces just over 886 of this move down, gets rejected repeatedly. It's basically oscillating. It's stuck in this zone. And you could argue it's kind of between the 618 and the 886. Yeah, dip below it here, call this a double bottom, call this another double bottom, but it's in this zone. So if you don't see the merit of looking at the 618 to 886 levels after this, I don't know what to tell you. It's obvious crude oil loves to extend to between those two levels. So so now what? These are just clues, right? This is giving you fantastic clues. So now let's look at something a little more actionable for the session. So actually, we already have some things that are actionable, but the thing that I want to look at right now is if this wants to just keep coming down, where might it come down to? So we'll use the same fib tool, same 618 to 886. There's the low, there's the high, 78.92 is the high. So we're going to drag this over, 78.92, close enough. These are just zones. These are just zones, 71.41. So drag this over here. If this thing wants to come down, if it loses this supply-demand zone, actually starting with this one, the obvious target is if it cannot find support here and come back up. If it gets below here, this is the first area you could expect to bounce. Call it 75.50. All right, that's $1 lower than where we are now. If it wants to keep coming, I think it's very likely you're going to come down into this zone. Just as it came into this zone, came into this zone, came into this zone, came all the way back up and exceeded this zone. But guess what? We caught it with a supply-demand zone up there as resistance. And now it came back up, could not make a new high. It's tried, it's been rejected 3 times. So if it wants to come back down, this area would give you another higher low, if that's what it wants to do. Or if it catches support here, or catches support here, the idea is it's going to come up and give you another higher high somewhere, probably up into this resistance. And then if that's the case, this upward trend is intact. However, if we can't even get above this level, just call it 79.50. It really needs to get above here. It needs to get above 80 to make it up to here. So these fibs are giving us clues. So that's how you draw it. So now, let me drill down. That's a 4 hour. So we've got very good measurements just off the 4 hour. But if we want to look at something a little more actionable, a little more detailed on these lower time frames on the 1 hour, for example, makes you wonder, where did this retrace to? Do you think this is between the 618 and the 886? Let's see. If this is the low, and this is the high, 78.92. You tell me, where did that price retrace to? 75.52. Oh, I gotta take the magnet off. So you get the point. I mean, you can already see it, but I'm gonna drag this over. Look at that. I mean, it's just remarkable. Crude oil loves the 618 to 886. And in this case, it did it multiple times. But you see, you're starting to see the deal. You know, nobody knows the future. We don't know what's going to happen next. But by putting these zones, these supply-demand zones first, video 1, now adding some Fibonacci levels, video 2, and these are very simple fibs because we're day trader scalpers. We're not looking at projections necessarily off into the future, looking at where is price going to be a week from now, 2 weeks from now. I want to know where the price is going to be an hour from now, 2 hours from now, a day from now. I'm a day trader scalper. Now, what's interesting, what led me to this method and learning from my buddy Armando, who goes by the Professor Trades, I discovered him through his free YouTube content because just like everything in trading, I've taught myself how to do almost everything by using YouTube. There's incredible content on YouTube. There's also a bunch of crap on YouTube, but over time you learn how to discern the difference between crap and high value content. It took time to figure that out. But once you start figuring that out, you find a guy like Armando who's teaching in a very simple manner, very effective and actionable supply-demand zones, and here I am putting them on my charts now, and you can use Elliott Wave on top of this just to get clues if you are wanting to know what's going to happen further off into the future, and also for parameters. I find this method incredibly simple, and it also gives incredibly useful, helpful parameters. So here you go. This is the second layer, adding fibs onto your charts after putting the supply-demand zones on there. So now, this chart is very noisy now, right? I've got all these zones all over the place, which was really just me showing you how these zones work. Now, what I'm going to do, I'm going to leave this larger zone, which is really this whole move up. I'm going to leave that on there for reference, okay? Because until we break that high, 79.29, these fibs right here are relevant, okay? Now at the moment, we're catching this support. So as a scalper day trader, this will be the last fib I'm going to put on here. I like to drop down into a lower time frame. I like to use fib time frame. So in this example, I'm using a 21-minute chart. And this is the same exercise over and over again on all time frames. Find a high, find a low. Now, this is effective if this low holds, 76.35. Is price done retracing to the downside? If it is, 76.35 is going to hold, and price is going to come back up. I'm not saying it's going to come back up. I'm saying if this bottom holds, then it becomes much more likely that price is going to revisit this zone. And I'm a day trade scalper, so do I need to show you how smart I am and tell you what price is going to do next week? No, I don't. I don't, because I'm only going to be in a trade for a few hours or a day. And really, I'm looking for 20 cents, 20 to 80 cents per day, and I've been getting it. 20 to 80 pips per day. So this is another zone if this low is going to hold. If this zone does not hold, your next clue is the 100 fib of this zone. Oops, sorry, wrong zone. I already took that zone off of there. But you can measure this a different way. Watch this. So this is the zone if price is going to go higher. If it wants to keep coming down, let's give us some fibs for down here. So I'll put that low, this high, 78.92, drag it over. The low is 75.50. So if it wants to keep coming down, there you go. Here's your zone. It's already in the zone. It's already in the 618,886 of this retrace down. Everywhere you look, 618,886. Another thing this is teaching you is don't trade the middle. Stay out of the middle. Wait, go do something else. Anything else. Do a crossword puzzle, take a walk. Don't trade the middle. Look for these extremes. Look for the fibs, especially when they are in line with a supply-demand zone. That's why we're doing this in a two-part and then a three-part video series. This is the second part. The first part is go back and learn how to draw these supply-demand zones, then learn how to use these fib tools. And it's subjective. Everything is subjective. But you can see how price is just very consistently in crude oil bouncing around between the 618 and 886. Very consistently over and over again. Very repetitive. This is going to add a new level of accuracy to your entries. It's going to add a new level of profit taking. What my personal thing is, I used to get really attached to the projections of Fibonacci because they all project higher. You can always measure something and project higher. Where is it going? And I've been doing that for years and having some success with it, somewhere in the 50 to 60% success of trading. And then now with this method, I've been doing this for the last 6 months, but I got more serious about it about 2 months ago with Armando, and it's just reinforcing these levels and reinforcing the idea of these zones. And now my trades are on a percentage basis, as long as my mindset is proper, it's more like 80%. So instantly increased my successful trades by upwards of 20%. Sounds like magic. All it is are fibs combined with supply-demand zone. It's utterly simple. So there you go. That's how you draw the fibs. And stay tuned for the next video, which is going to be trade setups on the hourly plus technicals. I use ATR EMAs. This is also very simple, using the 1 hour to show you confirmation of when to take the trade, especially if you're conservative. It's a much safer conservative way to trade, which is what is adding to the overall higher percentage of success. Cool, thanks for watching. Be sure to check out Armando's free content on YouTube. And if I joined his trading club, I suggest you check that out too. He goes by The Professor Trades, theprofessortrades.com, and The Professor Trades on YouTube for free. Lots of great free educational content. All right, guys, thanks for watching. Take care.